once again, we had the opportunity to speak with Chris Ailman. He is the Chief Investment Officer at CalSTRS. That is the world's largest educator-only pension fund. They manage some $307 billion. Now, the last time Chris and I spoke was just after engine number one, the little hedge fund, secured 3 board seats on ExxonMobil's board with the backing of CalSTRS. He told us then about the closed-door talks that CalSTRS and other funds had with engine number one and Exxon over the course of the months leading up to the vote. And yesterday, with that board victory in mind, we asked Chris if Exxon was an isolated event or maybe the start of a seismic shift in how he and his industry approach activism.
Brian, it's both. We got 3 board members on that board, which is massive. So if you go back and look at May, at the end of May, I think particularly for the integrated oil and the international oil industry, it was a historic day. Not only did we get 3 board members on ExxonMobil, Texaco, Chevron Texaco got told to increase their disclosure by their shareholders. And then even Royal Dutch Shell was told by the regulator to up their efforts in terms of moving to a low carbon output. So huge day, the beginning, I think, of a new era. And yes, it was a new day in terms of shareholder activism. It showed that institutional investors can work together and will work together if a board is recalcitrant and withdrawn, and if management isn't willing to engage with the shareholders. And ExxonMobil was a laggard in its industry, and we wanted to engage in it and get it to turn around. And I think you're going to begin to see that with this new board.
Chris, is it a new model for you guys, or is this a one-off? Are you looking at other potential targets now?
Brian, it's not a one-off. This is a new element, a new step up in our shareholder activism. We've been engaging with corporations for decades. Mostly quiet behind-the-scenes discussions, because that's what we would prefer. But now we've shown that if we want to step up and actually get into more of a direct engagement and change the board, we've got the power to team up with other people and do that. And I think that's a landscape change, not only for us, but for other institutional investors and for corporations. They really do need to pay much more attention to the long-term shareholders that own their company and listen to us. So again, I don't have anybody that we're engaging with or focusing in right now, but we've shown if we need to step up, we will do that, and we will take on a board and a CEO.
You know, this has been the #1 year ever for energy. It's up 44% as a sector, the best since the sector was created ever. Does it make the space more investable for you, Chris, given that you are able to affect some change on the corporate side, the board side, maybe the long-term planning side? Others are just fleeing the entire industry. This says to me you're still interested in the business, you simply want it to change.
Ryan, you hit it on the head. There are so many people that want us to divest and literally just turn our back on the problem, ignore like it doesn't exist by not owning these companies. The reality is, in life, we need hydrocarbons. Just look at the equipment and all the things that we're doing and we have right now at our desk: plastics, cosmetics, as well as transportation. We need hydrocarbons now and into the future. So we recognize it's going to be part of life, but it needs to be a lower carbon economy. We need to go to net zero in the next 20 to 30 years. So it's a massive change. And you know, Brian, I'm a long-term investor, so I'm not just looking at the one-year return on the oil industry. I'm looking long-term. The bottom line, Brian, I don't want Exxon to be the next Kodak or the next Blockbuster, or I'll go way back, the next Warehouse Records. I want them to be in business in 20 and 30 years, and they need to change to be able to do that.
Shepard Smith here. Thanks for watching CNBC on YouTube.